Hey, what is going on, everybody? Welcome back to the channel all about real estate. We are going to do a market update here in the Sacramento region. We have a ton of good information here for you today. We're going to be talking about housing inventory, the trends that we're seeing. We're going to go into what is going on with price reductions and home pricing, as well as give you an update on where the mortgage rates are here today as well. So a lot of good information. If you are a buyer, seller, or investor in this market, you're going to want to stick around and listen to this. With that said, if I could ask a small favor, if you could smash that like button, really helps grow and promote the channel. And if you like all things finance, real estate, and investing, please consider hitting that subscribe button to see more videos just like this. Without further ado, let's get to it. All right, so first thing here up on the screen, I have the data in the Sacramento region. So this is going to cover Sacramento, Placer, and El Dorado County, all single family homes, and it goes back a little bit over a year here. Now the light green bar is the amount of housing inventory. That's the units for sale, actual single family homes available for sale in the month of August. There were 3,618 units, as you can see here. That's actually down about 4.2% from the prior month. So we started to see this trend where we saw a lot of inventory coming online, a lot more inventory hitting the market. Well, we've started to see that taper off and even roll over a little bit. So it's a really interesting trend, especially going into the more of the fall and winter months. So we're going to have to see if this is just a historical trend, or if maybe people are making other types of decisions, and we'll talk about that here a little bit later in the video. Now, number of pended homes actually are pended contracts, so willing buyer, willing seller, they come to an agreement and put the property under contract to make that purchase and that sale. There was just over 2,000 units. That's actually up approximately 23.9% from the month prior. So we're starting to see sales activity, pended contracts, and closed sales start to pick up. Now, some of this might have to do with the reduction in interest rates that we saw in the month of August. But even that has been a little bit volatile. We've started to see rates come back up. So we'll touch on that here a little later in the video as well. Closed units were sitting at 1,737 closed units for the month of August. That is up about 4.5%. So again, little less inventory, little more activity on the pended contract side, as well as the closed sales side. All right, now we're looking at the average price per square foot. For the month of August, we are down to $338 a square foot. Now, we peaked in April of this year at $360 a foot on average. So we've actually started to see prices come down. However, if you go back a year to August of 2021, if you go back a year to August of 2021, we're still up approximately 3%. Now, if this trend continues, it's possible that we could see our first year-over-year either flat or a potential decline in actual home prices from the prior year. Only time will tell. We're going to have to watch this trend, see how it unfolds. Now, here's a chart that I found really interesting. The orange bar here at the bottom is the average days on market. We are at sitting at about 28 days on market on average. So you're still selling property in under a month. This is still very fast. But if you look back over the last 12, 14 months, this is the highest it's been in a while. So homes are taking a little bit longer to sell. But more importantly to note, if you go up to this green line here, this is the sales price versus the original list price. Okay, and so let's go back to June just as an example where it says 100%. What that means is that on average is if a home was listed for $500,000, it actually sold for $500,000, not for above list, not below, on an average. Well, what you start to see as we went into July and August, we'll have to see if this trend continues. We saw homes sell for 98% of the original list price and as low as 96% of the original list price on average for the month of August. All right, and then the last chart that I like to cover before we get into some of the other data is the month's worth of inventory. So basically, if there are, let's say, 1 month's worth of inventory, it means that if no other homes hit the open market, hit the MLS, it would take a month to sell everything that's currently listed. Right now, we're sitting at 2.1 months of inventory. So again, if nothing else hit the market, it would take just over 2 months to sell everything that was currently listed for sale. Now, this is actually down slightly. It's down just about 8% from the month prior, sitting at a 2.3 months worth of inventory. So it's down marginally. Like I said, we are starting to see the inventory kind of roll over and come down a little bit. We're just going to have to see, which is actually really typical for this time of year anyway, because kids are going back to school, holidays are around the corner, and we're starting to come into the winter months. Generally, the inventory starts to pick back up in February, March, and April of the following year. So we're going to have to monitor this close and see, is this just like the seasonal trend, or is there something deeper going on here? Now, switching gears slightly, I do want to talk about the price drops that we are seeing here in the region. So I have the Redfin data center here up on the screen. I'll try to link to it here in the show notes, but this shows the percentage of active listings with price drops. The red line here is an indication of where we are nationally. So on a national level, just over 20%, 1 in 5 listings are starting to see price reductions. That is the highest level it has been in over 10 years. This chart goes back to 2012. Now, if you come back to the Sacramento region, I have El Dorado County, Placer County, and Sacramento County. You can see the trend is very similar for all 3 of these counties, but they are all approximately at 50% of active listings are seeing price reductions in this market here today, 1 in 2. So very important for sellers to pay close attention to this, because it is critical that you price the property right when you bring the property to the market. Otherwise, you risk having to sit on the market, the listing goes a little stale, and then you start doing price reductions and ultimately chase the market down a little bit. Now, of course, if you're a buyer in this market, you're probably looking at it like a nice reprieve. It's a welcomed opportunity, because not only do we have more inventory that is available, but a lot of them are sitting on the market a little bit longer. Sellers are more willing to negotiate the price and the terms, and buyers can request a little bit more, have a little bit more leverage than they had in prior months, when everything was just going absolutely crazy. Now that brings me to the next thing that I want to discuss, which is the mortgage rates. Now, if we jump over to Mortgage News Daily, we take a look at the average mortgage rates today, you can see that they are back up. We have the 30-year fixed conventional loan sitting at an average at about 6%. 15-year note is at 5.26. We have FHA sitting at about 5 3/8, and a VA loan sitting at about 5.4%. So 30-year fixed rate debt has gone up dramatically from the beginning of the year. It's really no surprise, but what's interesting, if you look at, let me move it into the frame here. If you look at this chart, you can see it's actually been rather volatile. So in August of 2021, which is probably where we saw the lowest interest rates according to this chart, the average was for the 30-year fixed was about 2.8%. And then the market just absolutely went crazy and rates shot up to about 6.1%. And then the following month they gained down to about 5.28%, and then spiked back up to about 6%. So we have seen a pretty significant amount of volatility in the market, which I think is starting to make a lot of buyers out there a little hesitant, because they're just unsure what is going to take place in the market. On top of that, you're dealing with affordability issues, because when the interest rates go up so much, it costs so much more to service the debt. So the housing expenses are dramatically higher today than they were 6 or 8 months ago. All right, so now that we've talked about the stats and facts here in the Sacramento market, I do want to talk a little bit about what it's like for sellers, buyers, and investors in this market. So let's go ahead and start with sellers. So if you are a seller, it is good news that the inventory is starting to roll over and come down a little bit. That means that there's going to be less homes available, and hopefully that will be met with some buyer demand. But in addition to that, homes are starting to sit on the market a little bit longer. The market is starting to neutralize or just balance itself out a little bit. And it's much harder to have the leverage that you had, let's say, 6 or 8 months ago. So really important to look at the comps and the data. Listen to the feedback that you're getting from, any showings, or, maybe a few different brokers, if you're doing several interviews, and then just make sure that you are pricing appropriately and aggressively so that you draw in enough attention to hopefully generate a couple offers. Generally speaking, when you can get a couple offers, you can either you can bring that price up, or you can negotiate terms that are a little bit more in your favor. Now, if you are a buyer in this market, it is a good opportunity to negotiate a little bit more aggressively with price and terms. Now, that is going to be specific to the property, to the situation. There are various factors, so talk to a real estate professional, somebody that can help you through this process. But let's say you have a home that's been sitting on the market for over 60 days. They have not gotten any offers. It's getting stale. There have been very few showings. You need to work with your agent to find out all of the information that you possibly can. And that would be a type of property that you could probably go in, negotiate a great price, and then probably get really great terms. And when I say terms, you could potentially go out and negotiate a deal where the seller pays your closing costs. Maybe they compensate you or provide some sort of lender credit or seller credit to buy down your interest rate so that you're not financing the loan at, let's say, 5.75 or 6%. Maybe you can buy the rate down to the low 5s or even the high 4% range. So those are a couple ways you can improve upon the terms of that deal. Now, if you are an investor in this market, it's all going to come down to the numbers. Most of us know that. Right now, we are seeing high prices and higher interest rates, which means the debt service is going to be higher, which means cash flow is going to compress. So if you're an investor in this market, you have to develop a buy box with an internal rate of return or a cash on cash rate of return that meets your criteria. And then you just, more than likely than not, you're going to have to go out and make several really aggressive offers and just see who bites there. Because if you go out and, let's just say, pay list price on a property, finance at today's rates, we don't negotiate price or terms, then the odds are you're probably going to have to put 50% down or more for that deal to just break even or cash flow a little bit. So you want to be very cognizant of that. We want to negotiate a great price, and then we probably want to look to get the seller to pay closing costs, maybe even buy down the interest rate to improve your terms and reduce your monthly mortgage payments so you can improve your cash flow. Anyway, that is all that I have for you here today. What are you seeing going on in the market? Please leave some comments below, hit that thumbs up, subscribe if you haven't done so already.